Dipan, thanks a lot for joining in. Have a great day. We'll come back to you later. For now, we have a quick comment coming in from the management of Castrol. They posted a muted set of Q3 numbers this time around. The company's margins were impacted because of higher crude prices, forex and inflationary pressures. Deepesh Baxi, who is the CFO and Wholetime Director at Castrol India, joins us now to talk about that. Mr. Baxi, good morning and thanks a lot for joining in. Just a little bit about the margin performance, right? This time around, there was a bit of a crimp down, but you spoke about price hikes as well as cost control initiatives. How much was the price hike in Q3? Are there any more left? And what would the average margins be for the company in the second half?
Good morning, Sonia, and thanks for having me on the channel. Yeah, you're right. I think this quarter we've got hit on various fronts in terms of the high input cost, mainly driven by base oil, which is our key component, and forex as well. In terms of the responses, clearly we have been proactive. We have taken 3 price increases during the year. We took one in March, we took one in June, and we took one in September as well. So that has obviously helped us in terms of tiding over the input cost increases. We also have a plan where we look at our costs very closely. So overall, if you look at it from a point of view, most of the COGS increases, which is the input cost increases, we have been able to recover in the 9 months that have ended in September.
So what would this mean for your margins in the calendar year 2022? You've had, of course, 25% margins on an average up until now. Do you think this is something that you can maintain, or could it be lower than that? What's the target?
I think 25% is something that does look a stretch, given the outlook of the next 3 to 6 months. I think forex could be anybody's guess where this will end up with. Having said that, we always look at the pricing in the market from a strategic angle, and we took one in September, which was very forward-looking. I think there are a lot of other initiatives which we are doing in the market from a point of view of making sure that not only the core business, but other initiatives in the service and maintenance as well start generating revenues for us. So I would say it is more a band of margin that we are looking at, anything between 23 to 25%. I think there will be quarters where we will operate at a lower band, but then, idea is to clearly operate at the 25% range, which has been our trajectory over the last couple of years as well.
Okay, all right. Hi, Mr. Baxi. If you could give us a sense, what was the realization in the past quarter, because you're saying that you've increased prices numerous times, and also there was only a 4% growth on the top line, right? So all of that was realizations, or was it on volumes?
So firstly, Nigel, thanks. I think from a point of view of the overall 9 months,
yes,
I would say it's been a mix of both volumes and pricing. Our volumes have gone up almost 6-7% compared to last year 9 months. As far as this quarter is concerned, volumes have been under pressure. It has taken the impact of 3 price increases that we have had. So to summarize, volume plus pricing in the 9 months period, largely pricing in this quarter.
Right. Would you need to give in to a little bit of softer pricing? I mean, there is a big difference in the market between, your products, which of course are at the premium end, and at various other products, right? I think even the number 2, number 3 player, there's a big difference in pricing. Would you need to consider kind of coming off a little bit if you want to ramp up volumes? Is that a trade-off you're willing to make?
Yeah, a great question, Prashant. I mean, this is something we look at always. Our market share is in the entire private sector. We've got plus 20% market share, which is the highest. So we are the number 1 in that. And in fact, if you see personal mobility, which is cars and bikes portfolio, there we run a market share of more than 30%. The price volume equation is always a trade-off. But having said that, I think we are very clear in terms of how we are positioning our brand. It is a premium brand, and we want to make sure that we are operating within that premium. But that premium comes with the right technology and the customer satisfaction as well. We do take interventions on pricing. We've done that in 2020, I think, when our CBO portfolio was at a very high premium, and we made that intervention. We've also gone away from just taking a blanket price increases. We look at it tactical, we look at product, market, and segment, and make the necessary interventions as well. So when I say we've taken 3 price increases, it's not been across. In our agri products, we did not take a price increase in the June quarter, mainly because it's a quarter where it's a season. There is a tractor segment in which we sell our products as well. So we continuously do that in terms of making sure, but not at the expense of just downgrading the product.
All right, we'll leave it at that, Mr. Baxi. Thanks a lot for joining in. That's the first of the auto sales numbers that's coming through for the month of October. Escorts total tractor sales up 7.2% year-on-year at 14,492 units. The management commentary is actually quite good. They say that festive demand was good, led by above normal monsoon and higher water reservoir levels. For the coming Rabi season, all macroeconomic factors remain favourable for the industry. However, the overhang of some unabsorbed commodity inflation is the only one that remains a concern. Escorts are looking good, 7.5% overall growth. Export sales have fallen, but exports are very, very small contribution for Escorts. For them, the main contribution comes from the domestic business, which has seen an 8.6% year-on-year growth. And if you look at it from April to October, it's a 6.5% growth that Escorts has seen in their domestic business at 59,847 units. Sudarshan Sukhani is with us. Sudarshan, just a quick comment on Escorts. The